Alexander. From what part of the country are you from today?
So I'm from Phoenix, Arizona. Yeah.
Phoenix, Arizona. Phoenix, Arizona is my favorite city I like visiting. It's dope. It's a dope city.
Only been especially this time of year. Yeah.
That's the cool this time of year, 100%.
Yeah.
How long you been in Phoenix?
About 9 years now. Yeah.
9 years in Phoenix. Where'd you grow up?
North Carolina.
North Carolina.
Yeah.
You have a little bit of accent still.
A little bit of, it's sticking with me. I don't think it's going anywhere. So, yeah.
So one of the questions I always like asking is, how'd you end up in real estate? A lot of people have different stories of maybe they fell into it, maybe it was a parent or sibling, but everybody has a different story. So what's yours?
Yeah, so I fell into real estate. So actually early on, really before I even knew what I was going to do, going through high school, my mom owned a couple rental properties. And then I saw my grandfather retire at the age of 50 based on his commercial property. So what he did, he started a flooring business and ended up buying the building and then developing the land around that and built up some more commercial buildings. And then he ended up, passing the business down to my mom and just took off to Arizona, which is a big reason I'm out here now. And he's been living off the income, from that property ever since. So that kind of opened my eyes a little bit, but still really not knowing exactly what I wanted to do. I kind of how we all grow up, is graduate college, get a job, 401k, right? Work hard till you're 65. That was kind of the mentality. I did have plans on possibly owning that business one day, but, I really wasn't sure which route I was going to go. Mm-hmm. And so anyways, fast forward to as far as how I got more active in it. I actually came out here to Arizona, as I mentioned, 9 years ago. And a friend introduced me to the book Rich Dad, Poor Dad. And I'm sure you probably hear that a lot. They talk about that purple book there. Mm-hmm. And it totally changed my whole outlook, my perspective on, my career, where I was going, what I was doing. And I just started looking into real estate. And, next thing you know, here I am. I'm started with a single family and don't want to jump in too much to it. But just started with a single family and ended up buying an out-of-state rental property. And then the whole, I had to really determine why I wanted to do this, right? What was my why? You hear that question a lot. And for me, I wanted to create financial freedom. I wanted to, support my W-2 income, replace my W-2 income passively. And so real estate was the best way to do that. And other than the stock market, real estate for me, I grew up in the flooring business. Construction background is, really resonates with me. So that just that brick and mortar physical asset, investing in something, it creates value over time. I could sell it for a profit or rent it out and gain income based on that. So that's kind of how I got started.
This show is sponsored by HiveMind CRM. It is more than just a CRM. It is a real estate and business mastermind that comes with an all-in-one CRM. You can have unlimited websites and users. You can call, text, RVM, and email all in one user interface. And you can set up custom automations for any type and multiple businesses. 65% of companies start using a CRM system within the first 5 years of business. Once implemented, the HiveMind will save you on marketing, give you more time, and make more money. One of our users had his first $100,000 month using our system in June. We want to see you automate and accelerate your business. Text us at 210-972-1842 for future meetings and, of course, to get our $1 course on how to make more than 6 figures on one land deal. You can schedule your free demo today at hivemindcrm.io.
So starting a single family, are you still doing single family right now, or are you kind of pivoted into other asset classes?
Pivoted to other asset classes, yeah. So, right now I'm in apartment syndications.
Okay, yeah. Awesome. As an LP or GP?
So I'm happily to report I will be doing my first GP, probably closing on that in the next week or so. So
okay, awesome. What's the deal? What is it? Can you talk about it?
Yeah, so I just started my business, Optimal Equity Group, about about 3 months ago. And so personally, I ended up had a mentor in this space and was kind of following his coattails and getting started with a single family, and then heard about apartment syndication, which honestly I never heard of probably until about 2.5 years ago. And what it is, they operators go out and buy these apartment buildings, and they raise the capital from investors, for the down payment, renovation costs of the property. And, the investors get a return. So essentially you can double your money in 3 to 5 years, depending on how the deal is structured. I'm primarily focused in value add, which, to sum it up pretty quickly, is flipping apartments. And so they go in, renovate the units, force the appreciation on the apartment building, and ended up selling it for a profit. And so I started out investing in 5 of those, actually here in Phoenix, Arizona, personally. And then quickly realized, like, this is a great way to invest in, a non-traditional way other than the stock market, right?
Yep.
And you get great returns. I'm making the same amount of money as I did on that single family cash flow without having to worry about a sump pump going out, which I'll save that for a story a little later. But and I get to really just do the due diligence on the operator, wire the money, and I'm collecting a check every month. So anyways, that's what really encouraged me to start my business around those same lines. And so I partner with the GPs or the syndicators that go out and find these deals, and I'm helping them raise capital for it.
So what's your role right now in your GP deal? Are you capital raising, or did you find the deal, or what's your role in this part?
Capital raising. Yeah.
Okay.
Yeah.
Okay. Yeah, and this is Ferber doesn't know. There's different facets of that syndication, that everybody brings their own tool or their own skill set to the deal to make that deal happen. And I think the bigger the deal, the more optimized you can make it, because there's more equity to pass around, and there's more of a spread, so you can pass around different duties to different parts of different people to carry that responsibility.
Yeah, absolutely. They say, what's your superpower, right? Yeah. And, for me, I'm actually, working in my W-2, I'm in sales. So that kind of transitions into that, just raising capital. And yeah.
Do you still have your W-2?
Still have my W-2. Yeah.
I don't knock being a real estate investor and having a W-2, because it makes you more lendable.
Yeah.
Most investors like me, I can't get a bank loan if I ask for one and give them $1,000, $10,000. They don't even care. They're like, oh, look at me sideways.
Yeah.
Which is why it's important for me, because I have people that I raise capital with too, that they're more lendable. I'm like, hey, I can't get a loan, but you can.
Yeah.
Because we can be of value.
Absolutely. Yeah, and that's the cool thing with real estate, is there's so many different ways, you can bring value to a deal, right? I mean, yeah.
So what's the deal itself? Is it how big are the units? Are you trying to stay on that middle, like 20 to 50 unit mark, or are you going after something bigger?
Well, yeah. So these are, like, most of these are going to be 100 plus units. Yeah. And so, like, this particular one's in Dallas. I can't get into too many details because it hasn't, closed yet, and just with SEC regulations and all that. But this is in the Dallas market, Dallas, Texas area. But so really sticking to the hot markets, right? Dallas, Houston, Phoenix are the primary markets I'm really honed in on right now. Yeah.
Okay. How many partners are usually in a syndication? Because I know it can vary depending on how much weight people can bring to the table. Because some people might be doing this for a while, and they might have the capital already, they might have the balance sheet already, and they're just looking for somebody to find the deal, or somebody bring the management or something to that case. How many partners do you normally work with on a syndication?
Well, so it definitely varies. And now, if you would ask this question probably 6 to 8 months ago, very, very little, right? You got some that just have 3 or 4, initial partners that are like, the full GPs that are going out, doing broker relations, finding the deal acquisition, managing the property. And then they partner with like capital raisers like myself to go out and raise capital. But I tell you, some of these deals, Daniel, I seen when everything was really hot and interest rates were really low, they'd fill up in hours. And I mean, literally talking 10, 15, $20 million raises in a matter of hours filling up the deal. So now today, of course, that's turned a little bit. So it's a little harder to find capital now. So, that general partner can partner with 10 capital raisers, or 5 or, whatever makes sense to them, depending on what they need for the raise. Yeah.
So usually you're looking for accredited investors with usually like 100,000. Is that usually the case, or are you trying to get more money with less people, or less people? It doesn't really matter.
Yeah, so typically they're about at least $50,000 minimums. That's a benefit of going with me too, because a lot of these deals are 100,000, but I can open it up for for a little less. And it all depends on how the deal is structured. So this particular deal was a 506B, which is why I can't really get into too many of the specifics with it, but which takes non-accredited investors. So yeah, it just again depends on each deal and how it's structured, but I like opening up to non-accredited just to give those people that, because you got to meet those certain requirements to be an accredited investor, right? You got to have at least $1 million net worth for 2 years in your W-2, or, have a household income of $300,000 with your,
Yeah. I gotcha. It's definitely a small list of people that can hit that accredited investor. So if you can open that 506B to target everybody else, it kind of opens up the doors, just because most people will never even touch a multifamily deal because it's too big. It's too big to touch.
Yeah.
And that's the beauty of fundraising and bringing in a lot of capital partners. What tips can you give to capital raisers? Where to find them? How to find them? What do you ask? What do you bring to the table?
Yeah, well, so the best way to learn is by doing it, right? And then taking action, right? Which I found this one out with the last deal I've been raising on. And really, because I'm the type, I jump in, and what's that saying? You jump out of the plane and build your parachute on the way down, right?
Yep.
That's my mentality. And with this, looking back, I wish I would have built my brand a little bit more, I guess you could say, and just kind of, found the investors first, because you kind of had this idea, if I find a good deal, the investors will come. And I'm in sales myself, but it's a little different than it's a lot different than going out and asking somebody for $50,000 to invest in a deal than it is. I'm in flooring still, so going out and selling $10,000-$20,000 worth of flooring, right? But so it's people got to know, like, and trust you. So you got to put yourself out there. And I really think, and this is how I base my W-2 sales career too, is really just going at it from a mindset of how can I help this person, right? How can I educate and make sure they know what they're getting into, make sure they know what it is. Because again, a lot of people don't even know about apartment syndications. You don't just walk out your front door and says, "Hey, Bernie, did you hear about that apartment syndication they did the other day?" Right? Like, no, you got
to be in that room.
You got to be in the room. Yeah. I mean, and, it's not like the stock market where, it's all over the news and everything, everybody hears about that. So it's just putting the education content out there, getting in front of people, networking. This space is really built on partnerships and just seeing how you can add value, going back to what we were talking about before.
Do you have like educational materials that you show to like every single person? Here's what the basic syndication is, and then here's the deal itself of what it is and what the return is and the IRR and all that jazz.
Yeah, so I ended up, typically have like a sample deal. I'll show them, say, hey, this is what a deal looks like. This is what the returns, this is what they're going to go and do and update the property, add value to it, renovate it, So I do that. And then for the people who are brand new, I'll first start them out with some education content of really what's apartment syndication, how it works. I mean, there's a lot of benefits, it's recession resistant. You can save a lot of money with taxes. You can defer all the cash flow or write that off from the losses and the bonus depreciation. So just kind of explaining the benefits of why you would choose to invest in a real estate or, apartment syndication instead of the stock market, right? Or not instead of, but just an alternative investment,
Alternative investment.
Yeah.
I talk about, I'm on Twitter and I talk there's a lot of dividend investors and stock market investors on Twitter and online. So I'm always talking about I'm always making fun of their 4% returns because it's too close to inflation for me.
Yeah, absolutely. I mean, you could argue they're losing money really, with inflation, right?
Yeah, it's a crazy thought to me. My partner tweeted out the other day, is like, dividend investors are out there because they're bad at math.
Yeah.
And it's such a crazy thing to me, but like I don't knock like there's ways to monetize dividends, there's ways to monetize everything, but it's one of those things where like if you're really thinking about investing is about ROI and the time frame you can recoup that ROI because that increases your total ROI. Like if you get a 20% return and you can get that in 3 months, well, you got a 60% return or 80% return, you know? So it's really understanding that a good ROI, and if you can shorten the time curve, that's when you can really make a lot of money and make your capital a lot of money.
Yeah, absolutely. Well, and to your point too, is not only, you're just getting a 4% return, but then look at your bottom line after all the fees and, commissions you're paying, if you're in a brokerage firm or whatever. I mean, the bottom line, I mean, it's pretty, sometimes you're losing money, after you pay all those fees. So
yeah, no, it's definitely an alternative asset to look into. And I think the one thing I like about real estate in general is that there's so many different like asset classes. Like you don't have to do single family, and for everybody, I feel, and this is where like I think about single family all the time. Like 80% of the people in real estate are single family. Why is that? It's because there's the most of it and there's the most information about it.
Yeah.
So by us doing this and bringing this conversation out there, we're increasing more, not necessarily entertainment, but more education out into that space about multifamily and all about syndications and about other asset classes, because there isn't that information out there. You're not going to get it if you're not in the room. You're not going to get it if you're not listening to podcasts. You're not going to get it if you're not on YouTube. It's just not going to happen.
And again, it's just another alternative way, right? And I think, for somebody that is looking at investing, you really got to determine, are you a cash flow investor? Do you just need that money passively? Like, for somebody without a W-2, right? You need monthly cash flow. So you want to invest with assets that are, paying a higher return of cash on cash. Or are you a growth investor, right? So honestly, that's kind of where I'm at right now. Actually, that's not kind of, that is where I'm at, is I want to build my net worth. I want to grow my net worth. So yeah, the cash flow is nice. Some of these deals you can get anywhere from 5 to 8%, depending on how it's structured. But if I could double my money in 3 to 5 years, and just keep compounding that, that's huge, right? In 3 to 5 years, I'm already in 5 right now. I plan to do another. Well, I already did one this year so far. I plan to do another one. Just the compounding returns on this can be, pretty nice.
Significant.
Yeah.
What's your all in all goal like in 5 years? Do you want to be more of a GP doing more of these deals, or you trying to just eventually go back to LP and be more passive? Like, what's your all in all goal?
So no, building this business, I want to be more active. I love this space. I love real estate. And so I definitely want to be more active. I thought I wanted to be a GP, like the person with the boots on the ground and, managing the properties and, just being involved in everything there. But, as for a capital raiser, I'm still a GP on the deal, but I have the, certain qualifications and requirements that I have to meet, on the specific deal. But I like the idea of partnering with the professionals, right? Who already have the relationships, who have the network, who, already have everything established and in place, and just, bring in capital to their deals. It works out pretty good that way.
What is a quote that is yours or somebody else's that you resonate with?
I think 2 come to mind. Hopefully that's all right if I get to, because it kind of goes hand in hand, is, so education plus action equals results. And I heard that from Jake and Gino. I don't know if you've ever heard of them, but they're pretty big in an apartment space. And, I have to be comfortable being uncomfortable. I get into a lot of situations where I'm like, all right, here we go. Let's figure it out, and I think that's the best learning experience you can really learn from, is just, you got to have the education. You got to know what you're talking about, right? So there's definitely a piece of that, but, without the action, nothing happens, right?
Yeah.
And so, yeah. And honestly, going back to this first GP deal I'm about to close on, if I wouldn't have said yes and kind of just jumped in, right, I wouldn't be talking about that right now,
100%. 100%.
Yeah.
You can have all the information in the world, but if you don't take action, you're not going to get anything.
Yep. Exactly.
So what was the second quote? Did you say the second quote?
Well, so the one was education plus action equals results. And then I'd had to be comfortable being uncomfortable.
Be comfortable being uncomfortable. Okay.
Yeah. So kind of 2 in 1. They go together, but yeah.
No, it's good. It's good.
Yeah.
So what is your acquisition? Are you like reaching out to agents, or you're not even worried about that because you're working with the GPs?
Yeah. So I'm just working with GP. So it's pretty much retail and investors is who I'm looking for. Yeah.
Let me ask you this: Why the podcast? Why podcasting in general? A lot of people have an all-in-all goal. Is it to try and get capital as a whole?
Well, so just to get myself out there, build my brand, help educate people on different alternatives they can invest.
Yep.
Other than the stock market. And yeah, I mean, eventually if somebody's, interested in this space, definitely can help you out in placing your money in a, good cash flowing deal.
There you go. Like I said, I don't mind plugging it in. It is what it is. Every investor is looking for capital, including me.
Yeah, absolutely. Yeah.
Looking for capital. I guarantee if you listen to every episode, everybody's looking for capital. Everybody's looking for capital to place. One of those things. There's always an underlying need for it in every asset class. So it takes your business to the next level once you have the capital in place.
Yeah, absolutely.
Is there like an exit plan for your W-2, or is what you get there when you have enough deal flow or cash flow or net worth?
Yeah. So I'll tell you, I was on a podcast probably close to 6-7 months ago, and I said I put out 2 years there. So what's that, about a little under a year and a half now is the goal, which is, it's a stretch goal. They say, don't make goals that aren't easy to get, right? And, so you got to make them those big, audacious goals. And it's definitely a big, audacious, but it's attainable, right? I mean, you interview people and probably hear it all the time. I mean, people are replacing their income within a year or 2 years after getting involved with real estate, So,
real estate is definitely a cool strategy to definitely build up your net worth, your cash flow, all the above, depreciation. It all comes in down that path. So definitely a cool niche. Just find one strategy you're good at and like doing, because not everybody likes single family. I don't.
Yeah.
Single family is not the tell-all, do-all,
And honestly, I thought it was at first, right? I mean, my goal into this, when that first single family house, we were going to buy 60, 70, 80 properties, whatever it was, right? Just rent them out. And I quickly realized that was not the route I wanted to go. And yeah.
What changed? What changed exactly?
Well, so after just going through that process of the first single family home and that deal, I'm like, man, I had that thought, I got to go through this 60, 70 more times, which is doable. But for me, it just wasn't something that was really sitting well with me. And then
it was a lot of effort.
Yeah, a lot of effort. And then, seeing the repairs that can come up. I mean, one repair can wipe out your cash flow for, really 2 years. I mean, if you're cash flowing $200 a month, you got a $4,000 repair, 2+ years, your cash flow is wiped out. I mean, yeah, you're still getting equity, but for me, I think it's not really smart to bank on equity. You want to bank on a cash flowing property and hope it, raises, or hopefully it goes up in value over time. Right. So, yeah. Which that's not always the case. I mean, you see somebody flipping houses right now. I mean, I just did my net worth sheet yesterday, actually, and it went from 720 about 8 months ago to, probably down to $100,000, right? So, yeah.
I gotcha.
Yeah.
A lot happens very quickly in the real estate space.
Yeah.
A lot can happen.
Mm-hmm.
Well, where can people find you? Optimal Equity Capital Group, is that where your website is? Where can people find us online? I think you put your LinkedIn and Instagram as well.
Yeah, so LinkedIn, Instagram, I'm on Facebook as well. But yeah, all the major social media platforms. And then now, do you want me to give that out, or are you going to put them in the notes?
Because people might be listening to this and not watching.
Yeah. So yeah, Jarod at Alexander 2489 at for the Instagram. And then, LinkedIn, just Google my name, Jarod Alexander. And then I'm on Facebook as well, Jarod Alexander. Yeah.
There you go. I appreciate you coming on. I appreciate the information. Like I said, there's not enough information out there in the multifamily and syndication space. So I thank you for helping me provide some education in that space. Because like I said, I don't have very much out there in my podcast. So it's kind of cool having some more information come out.
Absolutely. Yeah. Thank you. And if anybody's interested, please, get in touch with me, and happy to provide some more education content around what we're doing here.
All right. Thanks, man. For everybody here listening, go like, subscribe, share with a friend. Please like us and share us. We appreciate you coming on and listening. We'll see you on the next episode. Thanks, guys. Have a great day, guys. Bye.
Hey, guys. If you would like to receive hot leads right to your cell phone in a text message, check out hiveleads.io, and you can receive the same leads we've been receiving in our campaign for 3.5 years that's made us successful in the land game. Check us out.
I've always worked for myself. Never had a job. And so I was watching Candid Camera one time. I got out of the nightclub business. I got injured, no health insurance.